Hey everybody, Economic Ninja here. Hope you're doing great. Got a great story, and I'm going to tell you about a story that happened to me when I was outside of Austin this last week, and it totally is opposite of what this story is trying to push. It's a narrative, and we're going to break through it. It's about real estate. It's about long term, and this is the title: Average long-term U.S. mortgage rates rise after 3 straight drops. It says the average rate on a 30-year home loan is still more than double what it was 2 years ago. It says the average long-term U.S. mortgage rate rose this week, snapping a 3-week pullback after reaching a high for the year in early June. Now let's stop there. Hey, this is weird. The Fed paused rates. Things should be good, right? And mortgage rates started coming down, but they came down literally like 0.1%. It was a joke. But the media is trying to spin it because they're getting paid, and there's influence from these mortgage companies like, dude, spur on lending. This thing's crashing. It's crashing right in front of us. It's burning. It's auguring. And so everyone's like, hey, look, rates are dropping. You should buy now. You're like, the ninja said, and I still stand by it. We're going to keep raising rates. As a matter of fact, Powell's telling you right now. What Powell's doing by telling you that is he's first off telling you the truth, but he's also trying to scare the market and get people to, on their own, without forcing their hand by raising rates, he's trying to get them to cool their jets and slow spending. But I'm going to be honest with you, there are still so many people that are so delusional, and this is like literally 2005 all over again, in the fact that the mentality, they're like, but things are good and I'm going to spend money and I'm so insecure. I got to buy that bigger house. I got to do something. Or that straight fear. They're like, if I don't buy now, I'm never going to be able to afford. And that is so far from it's so opposite. It's insane. But my point being is that rates haven't dropped the way that the Wall Street traders, the real estate influencers, all those people would have wanted, based on Powell just simply pausing. Everybody knows they're going to keep raising rates. It's going to get tighter, right? Well, here, we're at the pause, and now mortgage rates ticked up. Check this out. Mortgage buyer Freddie Mac said Thursday that the average rate on the benchmark 30-year home loan rose to 6.71% from 6.67% last week. A year ago, the average rate was 5.7%. The increase brings the average rate back to where it was 3 weeks ago on June 1st. It averaged 6.79, its highest level so far this year. So we are at all-time highs right now, right? At least for in the last year. And not all-time highs, but my point being is that here we're at rate pause. We're at rate pause. Why is it going up? Well, it's because mortgage companies are pricing in risk right now. They're seeing a ton of risk. And once you realize that and you go, oh my gosh, this makes so much sense, they are nervous to go out and give you a mortgage. They want more money, all right? The Fed hasn't charged them any more money, but yet they're raising their rates, the average benchmark rate. These are one of those simple ideas that I've told you over and over again. Let me throw this out there. Do you want to buy? Say it out loud. You need to. Do you want to buy a house cheaper than you are right now? The answer is yes, right? Yes. I want to buy a house cheaper. Do you want to see the signs of when to buy and when to sell? Yes. Okay, here's the problem. Oh, that's an obviously easy 2 questions. The media won't tell you that. You have to be around people that have seen these cycles, these ebbs and flows into the market and out of the market. You need to listen to people that understand how to do something when like when I was selling my real estate in 2005 and I was running for the hills, like liquidate. I was the only one. Nobody else was with me. They're like, you're nuts. You're crazy. Okay. Then it's like in 2011. Okay, it's time to buy. This is the time to buy. 2010, 2011. And people are like, you are nuts. The real estate keeps going down. You're like, you don't see the signs. You need to be around people that are like that. The problem is on YouTube and all these social media platforms, all you find is real estate investors that have been in the game for literally, I don't know, 10 years. All they've seen is prosperity. They have no concept of a downturn. And they're just like talking heads. All right, I talk about this in the real estate crash course. Understanding those key steps. I can't tell you how many times I get emails from people that are like, holy cow, I watch this stuff and it's so simple and it's never been taught, that nobody's talking about this. Why? Because the big money wants to con you into selling at the wrong time, and they want to con you into buying at the wrong time. It's quite, honestly, they only make money when there's velocity of transactions are high. And right now, velocity is down super low. Let me give you an example. I was in Austin, or outside of Austin, looking at some lakefront properties with my wife. Not that I was going to buy any of those right now because those are too high. But I said, well, let's go pick up something that's super cheap. And I know it sounds crazy. You're like, whoa, Ninja, but the crash hasn't happened yet. Well, I'm always doing something for, I buy real estate for to make money 5 different ways. I talk about this in the course. And one of those ways is tax benefits, okay? Very, very vital. And so tax benefits can be more profitable even when the house is going down in price. I've done stories about my palm tree farm. I bought a specific property that I could sell palm trees during the recession. I knew that the property was going to drop 50% in value, right? I didn't care because my cash flow plus my the property was bringing me in cash flow, right? Plus the what's it called? The tax money that I was bringing in, the savings, far outweighed it because I was doing a cash flow model as opposed to an appreciation model of making money, okay? I want people to understand that. It's so simple, it's crazy. You know, I'll tell you what, I'll put a handful more of those 80% off discounts. I always love it because people are like so stoked. I've been waiting for one of those. I'll put some more down below. But my point being is this. Once they're gone, don't pay full price for the thing. Wait for a sale. But my point being is that you need to understand that there's different times to buy real estate for different reasons. And if you're only buying real estate for one reason and one reason only, really it's like, well, I'd rather put my money instead of rent into a house and it could go up in value. You're losing because that home's really technically never going to go up in value as compared to inflation, to real wage growth. People don't understand that, okay? It just helps you keep up with it. All right. So you need to look at cash flow model versus tax benefits for real estate. Okay. So anyway, sorry, I digress. It says right here, high rates can add hundreds of dollars a month in cost for borrowers, limiting how much home buyers can afford in a market that remains unaffordable to many Americans after years of soaring home prices and limited housing inventory. The median monthly payment listed on applications for home purchase loans in May rose to $2,165, and that's up 14% a year ago, and a 2.5% increase from April, the Mortgage Bankers Association said Thursday. So think about it. When you're talking about just the payment of $2,165, that's just principal and interest going up, right? And that's up 14%. So what's 14% of what, $2,100? I'm doing some fast math. That's what, 142.80, say $310. That's quick math. Like, figure it out down there and let me know if the ninja is really wrong. But $320 extra a month. Well, the question is, are the people that are paying that higher month, P&I, principal and interest, are they making that much more per month? Or where is that now coming out of their budget? All right. We talk about this in the budget course. It's so vitally important that people understand this. And then once they see it, they go, you're right. Ninja. Yeah, nobody's making that much extra money. They're dipping into either savings or monthly cash flow that they don't really have. And that's going to put a squeeze on other aspects of the economy, which means we're going to have a crash. Okay. Super, super simple. All right. Once you see that, it makes it so much easier, and you have patience with conviction. You now then go and buy with conviction, or you'll sell with conviction. And the conviction is the understanding and knowledge of why you are doing what you're doing. And it makes your decision-making process so much more strong, and it gives you a lot of confidence, all right? Now, it says here the average rate on the 30-year home loan is still more than double what it was 2 years ago when the ultra-low rates spurred a wave of home sales and refinancing. The far higher rates now are contributing to the low level of available homes by discouraging homeowners who locked in lower borrowing costs 2 years ago from selling. And that's the thing. People are literally trapped. And as we get more and more, unemployment rate is exploding. As we see that happen more and more, we're going to have some serious problems because people don't have the money to sell their home and move. And that's going to force a lot of people into foreclosure. Foreclosure is already ticking up. And I want people to understand how serious this is, but also it's not serious to be scared. It's serious enough to be prepared and get ready and go crush it. Guys, I hope you got something out of this. Let me know down below in the comment section what is happening in your community. And I want to talk to you guys later. The Economic Ninja is out.